Hello, this is Sunko, the Korean bro, and today is April 14th, Thursday night. Um, Tomorrow is Friday night. The reason I wasn't able to do YouTube live yesterday and the day before and the day before, is because I've been busy. Uh, it's been quite rough. Like all the things that I had to go through was really hard. It's hard to explain what I had to go through. Things got really complicated. Uh, but I gotta do what I gotta do. So I'll just get back to what I've been doing. Okay. I'm gonna talk about what's up with stock lately. Okay. Okay. First, mm, Yahoo Finance. And market beats. Okay. Hmm. Elon Musk offers to buy 100% of Twitter for $54 a share. Um, Today is good, pretty good. It's all uptrend. Okay. Futures muted as investors eye mega bank earnings. Retail sales up 0.5% in March despite soaring inflation. Mhm. Kathy Wood keeping open mind on investing in GM. Inflation may have peaked or maybe not. Crypto may all come crashing down. PayPal stock is strong. It's not because its CFO is looking for Walmart. Analysts say these three stocks are their top picks for 2022. Hmm. Uh, JP Morgan, these three stocks could spike at least 40%. Is the biggest bank stock by a market cap a buy after earnings? Kathy will keeping open mind on investing in GM as car maker scale EV plans. The end of one cheap wonders why Nvidia, Intel, and AMD's valuations have experienced massive upheaval. Hmm. Kathy would watch Art buys a fascinating tech stock, more buy attack. Is Amazon stock a buy now that it plunged the 24 one split and buy back? Hmm. Elon Musk recommends investing in physical things. There are three physical assets that perform well during high inflation. Ford is now three businesses. What that means for a stock. Elon Musk makes $43 billion unsolicited bid to take Twitter private. This bank just downgraded the stock market, blaming rising bond yields. Three top S&P 500 stock market gainers today: American Airlines, Flash, AbbVie, PayPal fall on key assets. Tesla stock drops after Elon Musk offers to buy Twitter. This is why. What CFO departure means for PayPal stock? AT&T cut its dividend with a spin-off. Why it's still big enough? Is SQ stock a buy amid rebranding? After a pay deal and Bitcoin moves, top communication stocks for April 2022. The pandemic made these retailers stronger. Their stocks are buying opportunities. Is Google stock a buy? Smaller earnings bits expected. Netflix stock braces for first quarter report with possibly slowest growth in 10 years. Nvidia stock gains on upgrade. Ethereum won't crash the way Bitcoin did. Top REIT for April 2022. This is the ultimate Donald Trump stock. Meta's earnings could fall short again. Three value stocks that can provide safety as interest rates rise. Taiwan Semiconductor crushes first quarter target, sending TSM stock higher. Here's the best asset to own when inflation strikes. And inflation is rising, but these 16 companies have pricing power. AT&T failed at growth through acquisitions, but others hope to succeed. Okay, let's go through one by one, okay? Hmm. 3 weeks to fight off continued high inflation. Okay, Elon Musk is sort of becoming like billionaire activist investor caught in. The Tesla CEO, who has a 9.2% stake in Twitter, offered to buy the social media platform for $54.20 a share on Thursday. Here's what Musk wrote in a letter to Twitter chairman Brett Taylor, as disclosed in a new SEC filing. I invested in Twitter as I believe in its potential to be the platform for free speech around the globe. And I believe free speech is a societal imperative for a functioning democracy. However, since making my investment, I now realize the company will neither thrive nor serve the societal imperative in its current form. Twitter needs to be transformed as a private company. As a result, I'm offering to buy 100% of Twitter for $54.20 per share in cash, a 54% premium over the day before I began investing in Twitter, and a 38% premium over the day before my investment was publicly announced. My offer is my best and final offer, and if it is not accepted, I will need to reconsider my position as a shareholder. Twitter has extraordinary potential. I will unlock it. Twitter shares surged 13% in pre-market trading. Twitter. Okay, there you go. It will be hard for any other bidders consortium to emerge, and the Twitter board will be forced, likely, to accept this bid and run an active process to sell Twitter, said Wedbush analyst Dan News. Twitter confirmed in a press release that it received Musk's offer and said the board of directors will carefully review the proposal to determine the course of action they believe is in the best interest of the company and all Twitter stockholders. Hmm. Kathy will keep an open mind on investing in GM as car maker scales EV plunge. General Motors has been reviling up its electric vehicle business, and Kathy Wood is taking notice. The innovation-focused Tesla-loving ARK investor CEO, a vocal critic of legacy automakers, who predicted not long ago that GM would go bankrupt, is changing her tune on the Detroit-based car manufacturer as it commits to an electric future. Wood signaled in an interview with Yahoo Finance. She also revealed that her investment management firm recently met with General Motors CEO Mary Barra. I'm fascinated by how Mary Barra is really turning that ship around and very focused on cruise automation. Wood said in a sit-down conversation with Yahoo Finance's Julie Hammond. When asked whether Art plans to invest in GM, Wood said they are keeping an open mind. One thing we have to be careful not to do is we must not have a closed mind, she added. And when we see success, we have to acknowledge it and learn a lot more about it. So we're still on a fact finding mission. Wood's comments mark a major turnaround in her sentiment around the company from just a few months ago. In January, when Ford and GM stock jumped following announcements of their electric vehicle plans, Wood called the rallies ridiculous. The webcast said electric cars will make up too small a share of the traditional automaker sales. So let's look at the chart of GM and see what's really happening. Is this statement reflected in the chart? We'll see. Kathy Wood's keeping open mind, investing in GM as car maker scale EV plans. PayPal stock is falling. It's not because its CFO is leaving for Walmart. Walmart said late Tuesday it had named John Rainey as its chief financial officer. Rainey currently holds the same position at PayPal Holdings, but his move is in the red flag and analysts are watching ahead of the payment processing company's earnings. Okay, what are three picks? Churchill Downs is best known as the venue of the Kentucky Derby, North America's premier horse race run annually since 1875. First up is Bellring Brands, a spin-off firm from the well-known Post Food Company. Bellring focuses on active nutrition brands. Meat Max Group. The last topic we're looking at is Meat Max, a pioneer in placental biologics using amniotic tissue in the development of regenerative medicines. The company has used this as a base to create a line of placental tissue allografts, patent protected through a proprietary process. Silvergate Capital. We'll start with Silvergate, a California-based commercial bank that's a focus on digital currency sector. Silvergate serves a wide variety of business customers, including institutional investors, fintech software companies, and digital currency exchanges. The company started shifting to its digital focus back in 2013. After 25 years in banking, and as digital currency has grown, so has Silvergate. The bank currently has over 1,300 clients and has been profitable for the last 20 years. Silvergate Capital. Okay. Oh, it's already on my watch list. Okay, that's good. Among the bulls is JP Morgan. Stephen uh, has been profitable for the last 20 years. With all eyes on the Fed's QT and the rate outlook, as the future market is implying 10 rate hikes through the end of 2023. Blah 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 blah. Good. Okay. The next JPM pick we're looking at is Sprinkler, an experience management firm offering business customers a SaaS platform to unify electronic communications, voice calls, and messaging, emails, and live chat through an AI-enabled engine. The firm is a tech unicorn valued at approximately $2.7 billion before its IPO in June of last year. Sprinkler. Let's see what that is. What are they? Portland software maker settles. Posting their financial results. Why Sprinkler stock is jumping today? Sprinkler. I'll keep an eye on this one. It looks like this is really interesting. Article. Looking ahead, Sprinkler is guiding toward $140 million. We remain encouraged by the company's ongoing product innovations and believe that a healthy pipeline headed. Core therapeutics. We don't think about our skin much, but the skin is the body's largest organ, and each can be a symptom of something wrong underneath. Core Therapeutics is a late clinical commercial stage biopharma company with a single product. Okay. Not really interesting. Sprinkler, we'll keep an eye on this one. Server Gates, definitely the one that I have to keep on keep looking at. R buys a fascinating tech stock, more biotech. Renowned investor Kathy Wood, chief executive of R Investment Management, on Tuesday continued her current recent patterns, buying biotechnology stocks, a spectrometry stock, a 3D printer maker, and robotic software stock. Hmm. She's repeating the same pattern. Okay, she also sold the financial technology stock. All the evaluation below are as of Tuesday's close. Originated Revolution ETF purchased biotech company personalities. Art Genomic Revolution snatched mm-hmm. Okay. A lot of main management distraction. Okay. Mm. Tesla stock drops after Elon Musk offers to buy Twitter. This is why. Okay, after Tesla announces that it's gonna buy Twitter, uh its stock drops. Okay. What CFO departure means for PayPal stock. There is a big change taking place in the PayPal C-suite on Tuesday. The company announced the departure of CFO and EVP of Global Customer Operations, John Rainey, who leaves to take on the role of CFO at Walmart. While the digital payments giant continues its search for a permanent replacement. PayPal. Let's look at PayPal. What's their value? Very, very, very good one. Very, very, very good one. I would definitely buy PayPal. I already have it. Okay. Hmm. While the digital payment giant continues its search for a permanent replacement, current SVP of Corporate Finance and IR, Gabriel Rabinivito, will become interim CFO. Aaron, who presently reads risk platform services and legal, will become the EVP of Global Customer Operations. With PayPal shares he had, Mizu's Dan Dolph says Rainey time as CFO has been characterized by overpromising and under-delivering, and is not surprised by the news. The most glaring mishap was perhaps guiding to 750 MN accounts by 2025, only to walk it back several months later, says Dolph. The more worrisome development is that the announcement was not complemented by a guidance update. Given Rainey vacates his position just 12 days into the second quarter without a reaffirmation or change to the first quarter guide is somewhat peculiar and differs from other recent departures in the payment space. Mm. SQ stock about amid rebranding after pay deal and Bitcoin moves. Square stock. Square stock. When you think of SQ stock, both the coronavirus pandemic and cryptocurrency Bitcoin quickly come to mind. Now, there's a big acquisition to move for Square stock, not to mention a corporate rebranding, SQ stock. SQ meaning block. I already bought one. Okay, let's go over to Market Beat. Retail sales up 0.5% in March despite soaring inflation. Um, Three beaten up stocks the insiders are buying. Fasten your seatbelts. Fast journal is about to move higher. Turkey's central bank keeps steady amid high inflation. Tesla issues second recall for obstructing pedestrian warning. When Jamie Dimon braces for a week, so do we. Three dividend stocks with growth potential. Three dividend growth stocks to help you fight inflation. Okay, first one. Three beaten up stocks the insiders are buying. Okay, what are three? Okay, the insiders are buying these beaten up stocks. Today's screen for insiders buying stocks turned up three names that we're interested in. Groupon, Dash Time Metal, and Sony Automotive all have a positive outlook for business, but their share prices have been trending lower on a variety of concerns. The leading cause for concern is the inflation and the systematic headwind dragging on results across sectors and industries, and yet the insiders are buying these stocks. Hmm. Insiders get a deal on Groupon. Shares of Groupon have been trending lower for years but haven't hit a bottom. Not saw Groupon. New Groupon, Groupon, Groupon. Hmm. After no insider transactions for several quarters, all of a sudden the insiders are buying. Major shareholder Jane Butta purchased more than $11.25 million worth of the shares in five transactions over 2 quarters. Okay. Um, Dash Time Metal is on the brink of reversal. Dash Time Metal quarter four results were game changing for the business and the market. The company began production of one of its key products and made several high profile sales that we see driving business as we move forward. That's why it's no surprise to see both the insiders and institutions buying the stock, and why we think this market is on the brink of a reversal. Sony Automotive is a new and used car dealership that is quietly competing with the likes of CarMax and winning in the business. The company's used car concept is called EcoPark. It has a healthy e-commerce channel, and both are growing like gangbusters. There is concern that used car sales will flag due to higher prices, but that did not stop insider Port P rushing from buying more than $5.25 million worth of shares in early April. Sony Automotive. Hmm. Fasten your seatbelts. Fastenal is about to move higher. Has been on our watch list for quite some time due to its position in the industrial, housing, and retail markets. The company manufactures and markets a wide range of tools, safety products, and fasteners, and is reporting strong demand in all channels. The best news is that both revenue and earnings are growing, and that earnings growth is outpacing revenue growth as pricing increases fully offset the impacts of inflation. The quarter first report wasn't a blowout, but considering the times we're in, the business results represent the best of what the market can expect from the quarter first reporting season. And it pays a safely growing dividend, so there's that too. Three dividend stocks with growth potential. The analysts are driving these dividend stocks higher. AV, Junipernet, and PepsiCo. Okay, let's look at this in detail, and it's gonna be my last article, and we'll go over to business report. Okay. Dividend growth stocks are among our favorite investment groups because you got so much bang for your buck. Not only do the companies pay dividends, but business growth typically means capital appreciation as well. What this boils down to is called total returns, or the sum of your dividends and capital returns. And dividend growth stocks deliver the best total returns. This is especially true of dividend growth stocks that have a history and outlook for distribution increases, because dividend increases help maintain your portfolio yield over time while also increasing the yield per dollar on each dollar you invest. And if analysts like the stocks too, all the better, because their attention will help keep a stock moving higher, right? So that's why we're so interested when at these Juniper Networks and PepsiCo turned up on our screen for upgrades as we enter the quarter first earnings reporting season at V. Hmm, 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 hmm. Juniper Networks upgraded on market share opportunity. Juniper Networks has been trending steadily higher for the last 2 years on its growth value and analyst support. The stock yields about 2.445%, making it the lowest yielder on our list today, but still a healthy payout compared to the broad market. The company has been raising the dividend for the last 5 years as well, and just got an upgrade from Citigroup from sell to neutral on the expectation it can grab some market share from Cisco due to disruptions related to supply chain issues in the situation in Ukraine. The upgrade has the consensus the edging up the weak buy from a firm hold and comes with a price target of $36. Gets a double boost after positive study results. PepsiCo, a king of dividend growers. Elon Musk offers to buy Twitter. 3 recession-proof stocks to buy now. NY, Walmart Inc., Johnson & Johnson, Procter & Gamble. Okay, this is it for today, and I'm gonna go over to what is it? Really important matter. Uh, last time we were reading about hmm, reading yes, Paladin Interactive Business Reports, and today I'm going to read this again too. Okay. I'll be reading it loud really fast. So, okay. Mm. If we are unable to anticipate consumer preferences and successfully develop and introduce new, innovative, and updated products and services in a timely manner, or effectively manage introduction of new or enhanced products and services, our business may be adversely affected. Our success in maintaining and increasing our subscriber base depends on our ability to identify and originate trends, as well as to anticipate and react to changing consumer demands in a timely manner. Our products and services are subject to changing consumer preferences that cannot be predicted with certainty. Mm. If we're unable to introduce new or enhanced offerings in a timely manner, or new or enhanced offerings are not accepted by our subscribers, our competitors may introduce similar offerings faster than us. Okay. and blah blah blah, and what here it is. We have experienced and may continue to experience delays in the development and introduction of new or enhanced products and services due to the effects of the current COVID-19 pandemic. Moreover, we must successfully manage introductions of new or enhanced products and services, which could adversely impact the sales of our existing products and services. For instance, consumers may choose to forego purchasing existing products or services. The market for our products and services is still in the early stages of growth. And if it does not continue to grows more slowly than we expect, or fail to grow as large as we expect, our business, financial condition, and operating results may be adversely affected. Hmm. The market for our products is still in the early stages of growth, and if it does not continue to grows more slowly than we expect, or fails to grow as large as we expect. We have a limited operating history, and our past financial results may not be indicative of our future performance. Further, our revenue growth rate is likely to slow as our business matures. Is uncertain and cannot be predicted. The COVID-19 pandemic could worsen, or its effects may be prolonged, including as a result of variants, which could have an adverse effect on our business, results of operations, and financial condition. COVID-19 and related governmental reactions have had and may continue to have a negative impact on our business, liquidity, results of operations. And some of the risk factors are listed here. Okay. Despite the uncertainties caused by COVID-19, sales of our connected fitness products have increased during the pandemic as we saw consumers invest in at-home fitness equipment with the imposition of government-mandated stay-at-home orders. We operate in a highly competitive market and may be unable to compete successfully against existing future competitors. Our product and services are offered in a highly competitive market. Our competitors may develop or have already developed products. We derive a significant majority of our revenue from sales of our bike. They get money by selling some bike. Okay, a decline in sales of our bike would negatively affect our future revenue and operating results. So, impact on decreasing power of bikes could possibly affect these future of this company. Rely on a limited number of suppliers, contract manufacturers, logistics partners for our connected fitness products. A loss of any of these partners could negatively affect our business. Okay. Um, okay. We depend upon third-party licenses for use of music in our content. Okay. An adverse change to loss of or claim that we do not hold necessary licenses may have an adverse effect on our business. Okay. Value and reputation of the patent brand. Okay. Limited operating experience at our current scale of operations. If we're unable to manage our growth effectively, our brand, company culture, and financial performance may suffer. Okay. So fast paced. So they've never experienced uh, this kind of scale of operations. So they have tough time. Increasing incompetent cost. Okay. Mm-hmm. Yes, this business can possibly be affected by seasonality. Okay. Mm. Okay, some of the risk factors. Yeah. We rely on access to our production studios and the creativity of our fitness instructors to generate our class content. We plan to expand into international markets, which will expose us to significant risk. Any major disruption or failure of our information technology systems or websites, or a failure to successfully implement upgrades and new technology effectively could adversely affect our business and operations. Yeah, that's right. Streaming device operating system, networks, and standards that we do not control. Yes. If we're unable to anticipate appropriate pricing levels for a connected finished product and subscription, our businesses could be adversely affected. Okay. Oh, there's so many risk factors. It's hard for me to read all of them. It's so many. Other risks related to our connected fitness products and members. If we fail to offer high quality member support, our business and reputation will suffer. We may be subject to warranty claims that could result in significantly direct or indirect costs. Risk related to laws, regulation, and legal proceedings. We may be subject to legal proceedings, regulatory investigations, or disputes. We are subject to governmental export and import controls. Risk related to intellectual property. In the future may be sued by third parties for alleged infringement of their proprietary rights. We're a party to many music license agreements that are complex and impose numerous obligations upon us that may make it difficult to operate our business. Which may pose particular risk to our proprietary software, technologies, products, and services in a manner that could harm our business. We may require additional capital to support business growth and objectives. We're subject to payment processing risk. Cybersecurity risk could adversely affect our business and disrupt our operations. We may face exposure to foreign currency exchange rate fluctuations. So many risk factors. How can I possibly read all of them? The accounting method for notes could adversely affect our reported financial condition results. Capped call transactions may affect the value of the notes in our Class A common stock. Okay, now let's go to item number 2, properties. Our corporate headquarters are located in New York City, where we occupy facilities totaling approximately 323,000 rentable square feet under a lease that expires in 2037. 2037. We use these facilities primarily for technology or product design and research and development, sale and marketing, supply chain and logistics, finance, legal, human resources, and information technology. We also have member support and sales team located in Plano, Texas, where we occupy approximately 28,000 rentable square feet on the lease that expires in 2029. In addition to our corporate headquarters and regional campus, in December 2017. We entered into a 20-year lease for approximately 36,000 rentable square feet in New York City. "20-year lease for approximately 36,000 rentable square feet in New York City, which includes 4 production studios, an adjacent office space where we produce our content and offer fitness classes." In September 2018, we entered into a lease for 11th Floor Street in London, which will serve as our content production hub for Europe and has 20,000 rentable square feet. We expect to be in production from this London location in the first quarter of fiscal 2022. We currently operate a temporary. Ah, Mungi. Ah, I feel dizzy. Ah, I was concentrating on this business report so much that I could not pay attention to what was going on in this other side. I love you too. Oh. It's been so long since you came here last time. I feel like the last time you came here was like a week ago or more than a week. I feel so glad that you came here. Thank you for coming in. I love you too. Let me explain to you what I was reading, okay? I was reading business report of the company named the Pout Interactive. Oh, it's not that I was of course. I mean, like, oh, like deep in my mind, uh I wish it'd be much better if you were here, because I'd be always be happy if you were here and say that you love me. I'm really, really happy. But at the same time, I know that you've got a lot of things going on, so I totally understand, even if you're not here. So, like, I would say I'm like 80% waiting for you and 20% like I'm like, okay, I'm gonna focus on this reading. You know what I mean? Hmm. I'll be really happy, of course. If my girlfriend is here, I'd be. Who will not be happy if their girlfriend is here, right? So yeah. Hmm. I was talking about the company named the Palette Interactive. Do you remember the last time that I did when we were in cafe? I was reading income statement, balance sheet, and what else was I reading? Income statement, financial statements, balance sheet, and cash flow. All these four charts are considered in terms of fundamental trading. And along with that, I have to read a business report. That's what I was doing. Uh, Inside the business report, all the factors that you have to consider are listed, such as risk factors and competition and advantages. Things are all listed in it. It's a financial report that company has to produce uh, on yearly base. Mm. Every year they have to produce for investor relation. That's what I was doing. I've been talking too much. Thanks for coming in, Moo. I've been doing it for 46 minutes. For last 50 minutes, I'll be reading about the properties of Power Interactive, and then we'll go over to next as soon as possible because this report is hella long. It keeps me like forever. Last time I remember I read this too, but today I'm reading it again. But it's like taking forever. I mean, it's 700 pages. So in addition to to sum up, they got a lot of properties. Their headquarters is located at New York City, where they occupy a lot of employees, and like they've got also corporate headquarters located at Texas, uh, Taiwan as well. We here it says we acquired the manufacturing plant in Taiwan as part of the acquisition of Tonic Fitness Technology. We also completed a construction of a second manufacturing plant in Shinji, Taiwan during the second quarter of fiscal 2021. We have recently expanded our manufacturing. Okay, they recently expanded their manufacturing plant. Hmm. Even if Corona hits, they got plan, right? Hmm. Patent Output Park, and is where we will manufacture connected fitness products in addition to our existing manufacturing facilities. Okay, let's sum up a little bit. So, uh, Corona hit, and uh, the reason I decided to read this report is because I realized that they have so much danger than I had thought. Because when I look at financial statement of this company, I found out that their asset is okay. Their liability is larger than equity, which is not a good sign in terms of financial fundamental perspective. So that was the main reason I decided to read it, and the goods they have is bike and connected fitness uh equipment, and they think it's their advantage because unlike other companies that produce fitness products, their fitness products allows people to get connected when they do exercise. So it's their main competitive thing, and I totally agree with their strategy in terms of doing business. Because I mean, I'm s- you know everyone's lonely when they do exercise alone, right? Who will not be lonely when they do exercise alone in the training room, right? Okay, anyway, we intend to procure additional spaces. We add employees and expand geographically. We believe that our facilities are adequate to meet our needs for the immediate future, and that suitable additional space will be available to accommodate any expansion of our operations as needed. Mm. Okay, properties and legal proceedings. From time to time, we may be involved in claims and proceedings arising in the course of our business. The outcome of any such claims or proceedings, regardless of the merits, is inherently uncertain. For a discussion of legal proceedings in which we're involved, see Note 13 in the notes to consolidated financial statements included in Part 2, Item 8 of this annual report on Form 10-K. Hmm. And blah blah blah, something that I'm not interested. Legal proceedings, it has to do with legal. Okay, mine safety disclosures not applicable. And what else do we have? For market for registrants, common equity, related stockholder matters, and issue purchases of equity securities, holders of record, dividend policy, performance graph, comparison of cumulative total return. Okay, here it is. Overview. They've got overview. Awesome. Okay, let's briefly go over what I read so far. Here's brief overview. I'm like half done. Right, okay. Mine safety disclosures. Overview. It's a 50. Results of operations. Comparison of the fiscal years ended. It's just that I'm so used to like speaking in English alone that I talk this much probably. If somebody had asked me to speak in Korean like this, I would certainly do it too. But then it would take some time for me to get used to it because I mean, like speaking alone is not not really the situation that anybody would want to encounter. So anyway, let's read overview. Let's read overview, and then I'm going to finish. Okay. Paladin is the largest interactive fitness platform in the world with a loyal community of over 5.9 million members. As of June 30, 2021, we pioneered connected technology-enabled fitness and the streaming of immersive instructor-led boutique classes to our members anytime, anywhere. We make fitness entertaining, approachable, effective, and convenient while fostering social connections that encourage our members to be the best versions of themselves. We define a member as any individual who has a Paladin account through a paid connected fitness subscription. Okay, I forgot to mention they got a connected fitness subscription. Subscription is the main key, okay? Or a paid Paladin digital subscription. Our connected fitness product portfolio includes the Paladin Bike, okay, Bike, Bike Plus, and the Paladin Tread and Tread Plus. Our revenue is generated primarily from the sale of our connected fitness products and associated recurring subscription revenue. We have historically experienced significant growth in sales of our connected fitness products, which, when combined with our low average net monthly connected fitness churn, has led to significant growth in connected fitness subscriptions. Huh. What's the point here? Let's see. EBITDA. What do we have to look at? Let's look at key points. Content. In addition to the measures presented in our consolidated financial statements, we use the following key operational and business metrics to measure our performance, develop financial forecasts, make strategic decisions. Fiscal year ended. Total workouts, average monthly workouts per connected fitness subscription, subscription contribution, subscription gross margin, subscription contribution margin is increasing. Net loss, adjusted EBITDA is increasing. Okay. Connected fitness subscriptions. Our ability to expand the number of connected fitness subscription is an indicator of our market penetration and growth. Okay. Average net monthly connected fitness churn. Total workouts and average monthly workouts per connected fitness subscription. Revenue, connected fitness products. Revenue consists of sales or portfolio of connected fitness products and related accessories, deliveries. Revenue consists of revenue generated from a monthly $39. Connected fitness subscription, $12.99, pound and digital subscription. Connected fitness products, revenue. Cost revenue, connected fitness products. Operating expenses. Components of our results of operations. It's all explained in detail. It's awesome. Okay, total workouts and average monthly workouts per connected fitness subscription. Okay, this is it for today, and I'll see you guys tomorrow. Okay, bye-bye.